SuperMicro Computer's rally has captured investors' attention with shares up over 250% since just the start of the year. Well, the massive rally that we've seen over the last several months, over the last several years, has pushed its market cap from $4.5 billion just over a year ago at the end of 2022 to roughly $60 billion today. And the stock is going to be added to the S&P 500 later this month. Our next guest, though, is out with a warning about long-term, saying that the company could face some more competition. So what does that mean for the stock price? We want to bring in Matt Bryson. He is Wedbush Securities Senior Vice President of Equity Research. It's great to have you here. So many investors out there are watching shares of SuperMicro Computer, watching this massive run-up that we've seen in the stock. What do you think of the valuation today?
It's trading somewhere between 30 and 40 times, depending upon what numbers you use, if you're looking at next year's earnings. Obviously that's influenced by their exposure to AI, and they've done a great job rebranding themselves as the leading provider of AI servers. At the same time, you look at server companies traditionally, and they've had valuations that are more in the high single digits, low double digits. And so, it's something of a conundrum in that the question being, one, can AI revenues continue to grow at these levels? And then two, is this type of share that they've garnered at the beginning of the generative AI era sustainable?
And so with that in mind, delivery upon some of the street's expectations certainly in question here. What is the likelihood that they can achieve some of those lofty targets that now are priced into the stock and priced into the valuation, as you were mentioning?
Yeah, so I think in the near term, that there isn't a ton of risk. So Q1, it wasn't just SuperMicro, or Q4, it wasn't just SuperMicro who was exceeding estimates in AI. You saw the same thing from Dell. You saw the same thing for some of the Taiwanese ODMs. They all talked to strength in in Q1, sorry. Mm-hmm. And I think they have visibility in Q2. Backlog was still growing through Q4, even with sales lifting. So I think in the near term, there's still strong demand. There is still a shortage of NVIDIA GPUs, which means it's hard for share to migrate. And so you should get strong revenues, and SuperMicro should sustain share. In my mind, it's more of a question, what happens back half of 24 and into 25, and that's still a bit away.
And I'm curious from an analyst perspective how you're looking at this debate on the street of the AI bubble and whether or not some of the names that fall under your coverage are being caught up within some of the hype.
Yeah, so I mean, certainly you've seen a number of names in the semiconductor space see significant gains in valuation. I think that AI is going to become an underlying platform for technology. So like Microsoft OS, like iOS for handsets, or Android for handsets. And so I think moving forward, there's a ton of value in AI. And so even with valuations having lifted, it's still worth investing in. I think the questions come down to how sustainable are our competitive advantages, and what's the shift in numbers moving forward. So you look at something like NVIDIA. I think with CUDA, they've created a moat, and we can argue about whether NVIDIA share can remain at 80%, or at some point they're closer to 50, 60%. But I think there's a history of semiconductor companies who enjoy substantial share within markets, and those markets being one or two players, like we've seen in compute, where it's been pretty much Intel with a bit of AMD. The question I think with SuperMicro is more on the server side of things. You haven't really seen those 60, 70, 80% type share, market share numbers be sustainable. So historically, Dell has been the market leader at like 30%. And so can SuperMicro change that paradigm? That I just don't know.
Matt, there's also the risk of China, because you just mentioned AMD, the pressure that shares are under here early this morning on the fact that U.S. officials telling AMD that their chip that they made here to target the Chinese market is actually still too powerful. What's the impact that that is eventually, or is having right now, on the company's bottom line?
Yeah, so AMD doesn't really have a ton of share in China. So I think as soon as the US started limiting the ability of US companies to support China's requirements in terms of getting their best chips into China, AMD was always going to be a significant advantage or disadvantage. So I think whether or not they can export that chip that's already been governed in terms of performance, I don't think it matters that much because I don't think they were ever going to get a ton of share in China unless the U.S. lifted restrictions. With NVIDIA, it's a different story, right? NVIDIA has gotten CUDA into China. Again, I think that's a moat. It's hard for companies to move away from NVIDIA once they've chosen it. And so for NVIDIA, I think it was far more important that they got back into China. And it looks like they successfully have a chip that can ship into China. Now it's just a question of, what will their share levels look like given the restrictions on their chip's performance.